In this video, we'll understand how to reconcile book income to taxable income using Schedule M1. Let's start with the company's financials. Here are the revenue items, including service revenue, municipal interest, life insurance proceeds, and other income. Total revenue amounts to $2,162,000. These are the core operating expenses, including salaries, repairs, taxes, and advertising. Total core operating expenses come to $1,425,000. In addition, we have other expenses such as depreciation, warranty provision, entertainment, meals, fines, and bonus accrual. After considering all expenses, total expenses amount to $1,529,088. After accounting for federal tax expense, net income per books is $500,000. Now here's the key question. Will taxable income also be $500,000? Not necessarily. To reconcile this difference, we start with book income and make adjustments under Schedule M-1. We begin with book income of $500,000. Now let's look at 8 adjustments that increase taxable income. First, federal income tax. It is recorded as an expense in books but is not deductible for tax purposes, so we add it back. Entertainment expenses are fully disallowed, so they are added back. Meals are only 50% deductible, so the disallowed portion is added back. Fines and penalties are not allowed for tax purposes, so they are also added back. Next, warranty expense. This is recorded as a provision in books, but for tax, it is allowed only when paid, so we add it back. Bonus accrual is recorded in books, but if not paid within the required time, it is not deductible, so we add it back. Prepaid rent is not recognized as income in books until earned. However, for tax purposes, it is taxed when received, so we add it back. After all these adjustments, total additions amount to $211,912. Now let's look at adjustments that reduce taxable income. Municipal bond interest is included in book income, but it is tax exempt, so we subtract it. Life insurance proceeds are recognized in books, but they are excluded from taxable income, so we subtract them. For depreciation, tax allows higher depreciation compared to books, so we subtract the excess amount. Total subtractions amount to $132,000. Starting with book income of $500,000, we add total adjustments of $211,912 and subtract $132,000. This results in a taxable income of $579,912. This taxable income matches the amount reported on Form 1120, page 1, line 28, ensuring consistency between book and tax reporting. Here you can see how the taxable income flows into Form 1120, tying back to our Schedule M1 reconciliation. Book income is not the same as taxable income. Schedule M1 helps bridge the difference between the two. If you found this helpful, subscribe for more simple and structured tax explanations.